Nicholas Bornoz of Capital Link. I'm delighted to welcome you to a terrific discussion that is going to follow between Dr. John Coustas, the CEO, founder and CEO of Danaos Corporation, and Chris Wetherbee from Citi. Danaos has been an amazing turnaround story. The container sector is on fire in a good way. Chris is our partner putting together this conference. So thank you to both very much for delving into this interesting Q&A. And the floor is yours. Thank you.
Great. Well, thanks. Yeah, and thanks so much, Nicholas, for hosting us here. And Dr. Coustas, John, it's good to have you. Thanks so much for taking a little bit of time to chat with us. I thought it'd be, when Nicholas suggested that we had a conversation to talk about Danaos and sort of the arc of the business and where we are today, I thought it was a great opportunity. Going back to my days at Merrill Lynch, we covered Danaos out of the IPO in 2006. So we have some long history with the company. So it's a good opportunity for us to get to chat in a little bit more detail. But, maybe one of an interesting way to start, I think, would be sort of providing some perspective to investors of the history of the company, sort of where you started to where you've gotten to today. It's obviously been a great story that's been a long time in the making, coming from your father ultimately to you to what you've ultimately built. So maybe you could take a second and give us a little bit of a historical perspective of sort of when you took over, what you had, and then ultimately the strategy you employed to build the company to what it is today.
Yeah, well, as I said, the company started back in 1963, actually, with my father investing with some other partners into some small, coastal vessels at that time, small bulkers around 3,000 deadweight, just trading within the Med. Then time passing, my father started the company on his own in 1972. That's when actually Danaos Shipping was established, and we're celebrating 50 years, this year now. And, slowly, he started really to try and enlarge the company. Of course, it was difficult times. There was the crisis back then afterwards in 1973, 1975. Then the other big crisis of the 80s in shipping. So practically, I got back in the company when the company just had one ship. And, at that time, we had ordered some ships in Japan during the worst possible time. Anyhow, so practically from 1987, I took, let's say, full control. I started to build a company. My main really issue is to try to be able to organize the company well and to put in place all the necessary company infrastructure to be able to grow. Most companies really fail during their growth period. And because I knew that, I wanted to have in place all the systems that would be able to absorb growth. One of the most important decisions was in 1993, when I decided to buy our first container ship, fully cellular container ship of 1,500 TEU, which was a monster for that time. And because really, we had some multi-purpose ships at the time, and I was looking how the erosion of cargoes, was going from the typical multi-purpose twin-decker into the containers. So it was obvious that containerization was the future. So I decided to invest, in that sector ever since. So we had, of course, a small investment of 12 bulkers in the period 2002 to 2007. Which was a very profitable one, but we got out and we concentrated on containers ever since. And of course, through various ups and downs, that's where we are today.
Yeah,
we're very happy about it. There were many, events during our history that, were totally kind of exogenous of the business model and everything that we had. The first one was, of course, the big crisis in 2008, where everybody suffered, but we've managed really to get the necessary financing at the time, because despite our very large order book, I mean, we entered 2008 with something like 30 vessels on order, but all of them chartered. So, we have managed really on that kind of basis practically to make a very successful financing of the whole fleet. Then the other very kind of odd event in the industry was the Hanjin bankruptcy that took a very significant toll on us. But again, then we were able, really with the support of all our financiers, we have managed really to refinance that as well. And that was a pivotal moment because really at that time, we have corrected through a debt to equity swap, we've corrected really the balance sheet a big way. So we entered this new phase of the container industry, really with a very, very strong balance sheet, which became even stronger today. So that's more or less.
It's a great backdrop, and one that has certainly seen some ups and downs over the course of the time. I guess, maybe could you put what we've seen over the last couple of years into perspective with what you've seen running the company over the last several decades? And I mean, the impact of the pandemic initially, the response, the supply chain dynamics that have sort of ebbed and flowed with varying degrees of congestion since then. How challenging has it been to work through what we've seen here in the last, call it 2 years or so?
Well, as far as our business model is concerned, we do not have, in general, short-term exposure. I mean, for the type of ships that we operate, the typical charter, even before, let's say, the crisis, it was around, let's say, 12 months, not kind of less than that. Maybe, okay, let's say 6 months for some of the very small vessels, but more or less that's the typical average. So we are in general insulated from sudden shocks. Like, for example, the one that happened during the pandemic when demand practically collapsed on a very short period of time. I mean, our ships were in general on charter. Okay, we had maybe few ships coming off, in the following, let's say, 5-6 months, but nothing really that would derail the company overall. So for us, really, the whole thing had to do with the counterparty risk.
Yep.
Because that's really what really made the company suffer back in 2016 when Hanjin went down. So today, we are in a completely different environment where counterparty risk has been completely eliminated. Because not only just because liner companies are making money now, but because actually they are saving quite a bit of money and they are actually paying down debt, which means that they are becoming much more, let's say, investment grade in the future compared to what it was. So this definitely reflects also to the stability of our own model. Now, to me, the most important, let's say, finding of the pandemic is that after the consolidation of the industry post-Hanjin bankruptcy, we have seen that really liner companies, exactly because they faced a real existential threat in 2020, they all reacted very rationally with, rather than cutting rates in order to fill up the ships, which in any case the cargo was not there, they've decided really to withdraw capacity. And that was the pivotal point that saved the industry and led to where we are today. And and that is why. And actually, when we look at it, the reason, I mean, when liner companies in the past were slashing rate, it was for two reasons. One, maybe some of the bigger guys, they thought that we'd wipe out the rest. And, you know, they were playing, let's say, this game, which was, of course, very painful for them as well. Or because some companies, because of cash flow issues, they just wanted, you know, to get in some money short term through, let's say, increased volumes, etc., to supplement their financing. So I think that the phenomenon of having, let's say, a price war is to a large extent a phenomenon of weak companies that are trying, let's say, I mean, for short-term gain, they disregard long-term effects. So, I mean, this lesson, I think, has been very clearly learned from what we have seen from the carriers. And I believe that they will have a much more rational behavior in the future, which will not, will definitely, I mean, irrespective of the overall demand supply, will definitely make, let's say, the companies to keep them on a profitable kind of footing, which, as far as we are concerned, it means solid counterparties.
That's right. So that puts container operators like yourselves in a significantly better situation than maybe where we have been in past cycles. I guess maybe a two-part question. How do you think operator or liner companies rather act as we move forward through what is a growing order book? So the deliveries of growing order books, how do you think that they operate? Do you think that they maintain the same degree of discipline with blank sailings and capacity management as we've seen? And then as an operator such as yourself, is there anything that you'd like to do? You've already diversified significantly. So to your point about counterparty risk, it's been minimized in the portfolio. Is there anything that you would do potentially differently as we embark through this next potential cycle here as vessels begin to deliver more in earnest over the course of the next several years?
Yeah, as I mean, everybody knows, I mean, this time we have, apart from the let's say the typical demand-supply balance, we have an ongoing decarbonization phase and various, let's say, restrictions that are going to be placed on the ships in terms of their trading performance as far as speed is concerned. That's going to kick in from 2023. One additional factor, actually, is nowadays with what has been happening with the war in Ukraine and the effect in the energy markets. It's obvious that we're going to live for the foreseeable future with significantly higher energy prices.
Mm-hmm.
I don't see that being resolved, let's say, within the next 6 months. I think that it will be a kind of a much longer process, which means automatically that it makes sense for the charterers to slow the ships down. And already in 2022, in 2021, we had at least half a knot higher average speeds of the fleet compared to 2020. Actually, charterers would like in the end to be able to slow down once they have, of course, the ships.
Yep.
And actually, what's going to happen with all new ships being delivered, in the first phase, they're going to be used in order to slow down the loops and first of all, to be able to bring, let's say, better, how can I say, better stability in the overall trade. Because today, I mean, there's no point in having, let's say, saying that we have a 10-week loop, when in the end you cannot serve in 10 weeks and you need 11 or 12 because of the delays and congestions in the ports. So all that, there will be significant capacity that is going to be used to alleviate the network pressures. On the other hand, we have the speed and also the cost element, which will force, let's say, the liner companies, once they have the ships, to slow them down, because they will be making actually much more money by reducing vessel consumption.
Yep.
So it's a very difficult exercise overall. One thing that is for sure, now that everybody has realized that the energy issue has to be resolved sooner rather than later, it means that in order to speed up decarbonization that everybody is talking about, we will need definitely larger investments.
Mm-hmm.
And here, of course, in shipping, we still do not have, let's say, any alternatives in terms of green energy. But at least if today, for example, you can have a new ship that, let's say, is burning something like 20 or 30% less fuel compared to some 15 or 20-year-old ships, there is a lot of potential actually to be able to, let's say, to invest in these ships types. And exactly, I mean, this element which is underinvested and over-consuming is the mid-size sector. And that's why, and also when our latest, let's say, investment concentrated on this, on the 7,000 TEU segment, that we believe has, let's say, a very good potential for the future, because it's going to replace vessels that are really very high consumers.
So if you look out over the next several years, you've obviously been at the helm of the company now for several decades. As you think out over the next 10 years, what do you think the strategy of Danaos will be, and what do you think the company might look like several years down the road from now?
Well, our strategy has always been to be, let's say, the preferred partner for the liner companies, because we invest in the right vessels, and not only we invest, but we operate the vessels in a manner that is creating really not only synergies, but also benefits to our clients. And especially, I mean, today, with all the efforts on decarbonization, there are a lot of operational perspective that a company can follow in order to help customers achieve these goals. And we are presently cooperating with a number of our large clients on projects like that, which will really give us a competitive edge.
Okay, that makes sense. I guess as we're thinking about wrapping it up, as we're running short on time, you know, if you were to think about the most important things you think you've learned over the course of your career and how you want to employ that as we go forward, what do you think that those are as we're thinking about the container shipping space specifically?
You know, the most important thing is really to try to learn from your mistakes. I mean, I'm not saying we have done mistakes, but we have never done the same mistake twice.
Fair enough. That's good advice for people. That's right.
Yeah. So we learn from our mistakes. I cannot tell you, you know, if we're going to make a new one, because a mistake actually is something that you find out post-mortem after it had happened. But at least I hope that for the mistakes that we have done, we are, let's say, insulated. Maybe from a new one, I don't know.
well, certainly the path that Danaos has taken and the trajectory that you're on today is quite a good one. So yeah, I'd say it's fairly fair to say that you've learned from mistakes and have capitalized on those and turned those into opportunities as we've moved forward. So it's been very interesting from our perspective to watch sort of the rise that you guys have had and the success that you've enjoyed over the last couple of years. So, you know, Dr. Coustas, thanks so much for taking the time to join us, and thanks, Nicholas, again for allowing us to host. I thought this was a great conversation. Great to pick your brain about what's going on in the market and Danaos specifically.
Thank you, Christian. Thanks very much for having us.
I think you're actually muted, Nicholas.
Yeah, I was muted. I want to say thank you. It's been a terrific discussion and very privileged to have Dr. Coustas with us and Chris. Thank you.
Thank you.
Thanks, guys.
Thank you.